Hello, this is Ross with Market Traders Daily, and this is today's video analysis for December 16, 2019. Today we're looking at the EURUSD, the euro versus the US dollar for today's trade analysis. Starting here on the daily time frame, I have it zoomed out, moved over a little bit so we can see the long-term trend. We're going all the way back to September of 2018, where the market capped out its high, top left-hand side of the chart, right there near the 1.18 level, 1.1800 or so, give or take a little bit, right around the top of the trend. Connects here in the middle. Let's just get the crosshair. Connects here in the middle, right around June. End of June 2019, we connected right there in the middle. What's important about that black trend line is that's where the market is today. We're holding underneath it as resistance. Something else I wanted to point out here on the daily time frame are the two moving averages. The 200 period simple moving average, the blue line, and the 100 period simple moving average, the green line. Both of them sloping lower, both of them going down, also implying a downtrend. With the black trend line, the two moving averages, we have overall been in a downtrend for quite a long time here for the euro dollar. So the question, of course, is will that downtrend continue? Or will the market change its trend direction and continue to push higher? And I don't think we've answered that question fully yet, but it is interesting where the market is right now, holding underneath today the long-term black trend line and the 200 period moving average, that blue line there. Let's zoom it in on this a little bit more, and we can see there it is. There's the black trend line. There's the blue moving average. Friday's candle last week closing out as a, let's call it a shooting star candlestick. Smaller body, significantly longer wick on the top, implying a sudden infusion of sell orders as it challenged above there and rapidly reversed and turned back lower back underneath the 1.115060 level, which is that orange shaded area there on the chart just above the current market. So black trend line, blue 200 period moving average, 1.116050, the orange shaded area, the shooting star. All of that to me says it'd be a difficult opportunity right now to be long and buy the euro dollar. So what we're looking for is a weaker euro. The euro start going lower, and we want a stronger dollar. That's going to give us a push lower. One of those two things is going to cause this to go lower. Sell off of the euro or a rally for the USD will cause this to turn back down. So those are the things that we'll be watching for. Good news for the US, maybe poor news for the euro, causing this to rapidly turn around and go back down. Break of the blue trend line. Blue trend line is the rising trend line for the past couple of days, couple of weeks. We also would look for lower highs and lower lows to be underneath that blue trend line and start pressuring lower. So first off, for the day, I think it's a difficult place to buy. Underneath all of that information there, underneath 111.5060, difficult place to buy it. I think the only real reason in the past 3 or 4 days to buy it would have been down here at the green shade area, 111. So we're not buying today underneath that orange zone. Breaking the orange zone may change our mind a little bit. Down here at the yellow zone would really only on the intraday be the time to buy it. So we're not buying right now. If we're not buying, maybe we have an opportunity to sell. Let's go ahead and take it on down to the 4-hour time frame. Here we are coming into 111.50 right now, rising back up into it. There's the price action from last week, the rise and then the sudden fall. Now we're pressuring back up again here into this orange shaded area. So again, I'm not really keen on buying it under that orange zone. I don't want to buy it now. Potentially short underneath there, looking for the market to begin turning lower again, making lower highs and lower lows. Risk right now, we just don't want it to get back above that orange zone. If it does, the chances of it challenging the blue zone or higher increase, getting above the 111.60 level. So if you decide to go short, your stop loss shouldn't be too high. I don't think above the 111.60 level. It doesn't really need to be that high. I mean, we're only talking 111.75, 15 pips higher to the blue zone. Maybe put a 20 pip stop loss on it. If you decide to go short at the orange zone, targets the yellow zone, green zone, or significantly lower, maybe even all the way down to the 1.1 level or lower if we start to see a reversal of trend for the euro dollar this week.